Good afternoon, everybody. Thank you so much for joining. This is a lunch and learn on life insurance, and it's really meant to be on a very high level. So we're not going to get into the nuts and bolts of it, but it's really about the differences in the different life differences in different the differences in life insurance products and what the needs are typically and why people buy life insurance. So that's kind of what we're meant to go over today. And then if you guys have any questions, either shoot me a chat or unmute yourself. Go ahead and pop in anytime you want. I'm happy to answer any questions you guys have. If there's anything, if you want to learn more than what we're going to go over today, certainly reach out to us, and I'm happy to do, a one-on-one lunch and learn, or just spend time on the phone, or whatever the case may be. So I just want to let you know that this is not, this is not it. My name is Heather Himelwright. I probably would have started with that. And I am the president of Integrated Benefit Consultants. I've been in the business for 27 years. And I started as a life insurance salesperson. And obviously the companies, we do employee benefits, we do lots of other things, lots of other insurance, but life insurance is definitely a focus of ours. And it's really where I cut my teeth. So you might learn more than you actually wanted to know. So essentially, what is life insurance? Obviously, life insurance, everybody knows that if you pass away, whatever amount of life insurance you have goes to your beneficiaries. And what we wanted to do is talk about the different types of life insurance and how it works for you. And then also changes in the industry, because the industry has been changing quite a bit over the last couple of years, well, after the last 10 years, but it's really started changing in the last 3 years. And COVID is definitely a reason why. So obviously, as I mentioned, life insurance, if you have a life insurance policy, if you pass away, that death benefit will be paid to your beneficiaries. And what it's meant to do is fill a void. Obviously, if you pass away, so if I pass away, or when I pass away, my family's going to need to fill the gap in my income. So obviously I have life insurance to fill that gap in case something happens. And that's what life insurance is meant to do. It's to mitigate loss, essentially. And it's loss of income. Or it could be, estate planning. There's lots of different ways or uses for life insurance. But the most common one would be to fill an income gap. So as everybody knows, if you have life insurance, you have a beneficiary. That beneficiary is the one that's going to receive the money. A beneficiary could be a trust. It could be an individual. It could be a company. It could be many different things. And it's all about what that need is. Obviously, the policyholder is going to be the person that owns the policy. Now, it could be a policyholder, could be, like I mentioned, it could be a business. It could be an estate. It could be, I could own life insurance on my parents. I could own life insurance. I do own life insurance on my children. So I am the policy holder of those policies. And cash value, we're going to talk a little bit about that, but cash value is essentially on a permanent product, which would be universal life or whole life. And I'll mention those names quite a few times over the next 23 minutes. But cash value is meant, it's within a life insurance policy, you can accrue money, meaning almost like a savings account. And that's what cash value is. And we'll talk about how that works. And then a death benefit, obviously, is the amount that you receive. And risk class, so I did want to talk about this too, is risk class is when you apply for life insurance, what rate that you get is based upon several different things. It'll be based upon, most importantly, it will be your health. To be smoking status. It could be, lots of different things come into play when you write a life insurance policy and you obtain a class. Obviously, the least expensive would be a marathon runner that is super, super healthy and in their 20s. Obviously, they're going to get a wonderful rate cost. But if you're 80 and not that healthy, then obviously your risk class is going to be a lot higher and the policy is going to be a lot more expensive. And then that kind of bounces into the evidence of insurability. And that's where you prove what your rate class should be. And that's determined by, typically, it would be a paramed, which means somebody comes out to your house and sees you. They take height, weight, blood, urine, typically. Sometimes, depending upon the rate class, it'll be, or the amount, it'll be a resting EKG. It just depends on what you're applying for. And that determines that risk class. So, and I get this question a lot, and it sounds funny, but who needs life insurance? And quite frankly, it's pretty much everyone. Because everyone, I don't care if you're a stay-at-home mom, your role is, it's extremely valuable. Obviously, if you're not there to do what it is that you do for your family, whether it's earn an income or work in the home or, for a business, if you're a partner, everybody needs life insurance. And it doesn't have to be a ton of life insurance. It's just enough amount, it's an amount high enough to mitigate that loss if you're gone. And so I know it sounds silly and not everybody has life insurance, but quite frankly, everybody does need it. Because if you're not there or, your spouse isn't there or whatever, there's a loss, definitely a loss of income. And then this kind of talks about who has life insurance. And I mentioned that everybody needs it. Well, only 54% of the population have life insurance. And that's, that just tells you that some people aren't believers. And I completely understand that. I've sat with many, many clients that have said, I don't care if I'm gone, whatever. Well, then that's your attitude and that's your prerogative. But for the most part, everybody does need it. And then this does mention also what the average life expectancy is, and it's 76.1 years. Obviously, that's different. People live to be 100 and some odd years old. Some people don't get to 76, but that's the average life expectancy. So when you're buying life insurance, you want to keep that in mind, that what is your life expectancy? Obviously, you can outlive it or underlive it, but just when you're doing it, you want to make a smart purchase. So this is actually kind of the crux of it, is term life insurance and permanent life insurance. Term life insurance is essentially, it's insurance that you buy for a certain term, a period of time. So for instance, if you buy a 10-year term, it means, let's just say your premium's $100. Your premium is going to be $100 every year for the next 10 years. But on that 11th year, if you still have that term insurance policy, your premium goes from $100 to $500. And then it progressively gets more and more expensive. So when you're buying term insurance, and you could buy 10-year, 20-year, 30-year, 15-year, if you buy term insurance, you're buying it for a period certain, meaning that you want to make sure that whatever it is that you're trying to cover, that term insurance covers it for that amount of time. Let's say you buy life insurance, people buy it when they have children and they think, okay, I need life insurance until they go through college. Well, don't know how long that's going to take, but you probably want to buy a 30-year term at that point because, the kids are going to be about 25 by the time they finish, and you want to make sure you make it through that period of time. Because the thing to keep in mind is that when you buy term insurance, one, you have to keep an eye on it because it gets very expensive after that period of time is over. And two, there's also something called convertibility. So let's just say something, I've had this happen, unfortunately, to clients where they buy a 20-year term. And what happens is they develop some type of medical condition. They know they're not going to be able to get life insurance after that particular period of time expires. Well, you can convert it, which means you can take your term insurance and convert it to permanent insurance. And every term insurance policy has a convertibility period. So if you convert it and you convert it to permanent life insurance is going to be universal life, whole life. And what that is, it's more expensive, obviously, than term, but it's a way to lock in your life insurance for your entire life. Meaning if you live to be, some of it's guaranteed to 121 years old. Nobody makes it to 121, but meaning it's guaranteed forever. So permanent life insurance is a way to make sure, yes, it's more expensive, but it's a way to make sure that you have your life insurance for your entire life, so long as obviously you pay the premium. And that's whole life, variable life, universal life. Now, term versus cash value. Term insurance obviously has no cash value. And I talked a little bit about cash value. And essentially, that's a way to build up money within your policy. Whole life insurance is the best way to do that. It's the most expensive insurance, but it's the best way to have permanent insurance. Meaning the money within your policy accrues the fastest within whole life insurance. And, there are a million different ways to write whole life, or write variable life, or write universal life. And it's really predicated on what your needs are, what's affordable, and what your needs are. How much insurance do you want? How much insurance do you think you need for the rest of your life? Those kind of things. Now, renewable term versus non-renewable term, because I mentioned renewable term is essentially once you get that past that 10 years or 20 years or whatever it is, you can continue to pay. Some term insurance will actually just stop. So after your period certain, your 10 years, you don't have it. There's no more insurance. If you want to keep going, that's not an option. More often than not, it's renewable term. Typically, so long as you can afford the premium for term insurance, once that period expires, then you can keep it going. Now, whole life versus universal life. And this is the biggest question I typically get. Whole life it's the best way to accrue cash value, but it's also the most expensive. So, for instance, I purchased whole life insurance on my kids. I know this sounds funny, but of course I'm a life insurance person. So I did it for them when they were born. So they have whole life insurance. I pay a certain amount every month. I've had it. I have a 16-year-old and a 14-year-old. It's a way to accrue cash value. Now, I wanted it for them because I wanted them to be able to have a savings. I wanted to guarantee that they had insurability. I wanted to make sure that they actually had it for the remainder of their life. Now, whole life is very different than universal. Universal life is less expensive, but it's also does not accrue cash value as fast as whole life. Typically, people, if you're buying universal, you're buying it. It's the least expensive way to keep life insurance in force permanently for the rest of your life without worrying about cash value. So it's not really a cash value buy. It's a way to keep insurance in force for the remainder of years. Now, variable life is different, and it's not as popular as whole life, but essentially variable life is based upon your cash value. You get to control where it goes, meaning depending upon the company, of course, but let's just say there's 20 mutual funds. You can actually invest money in those in those mutual funds, and you can pick and choose. So if you want to go, say there's a Vanguard fund that's available within there, you can put it all in Vanguard. You could put it in American funds. You can put it in BlackRock. You can, wherever you want to drive that money, you can do that. Whole life insurance is different because it's based upon, without getting too into the weeds, but it's based upon either the general account of the insurance company, or if it's a participating or a mutual company, it's based upon obviously that company's investments. So variable life is a little more. What's the word I'm looking for? You have to be on top of it. You can't just forget about it. You do have to pay attention. You do want to look at your statements. You do want to make sure that you're invested properly. A lot of people, what they do is they just invest it in kind of the money market account, and then they just leave it. But if you're going to buy variable life insurance, you really want to be on it and make sure that you're investing it the way you want to. So this also talks about kind of typically, obviously final expenses would be to pay for funerals and all that kind of stuff. But most policies you cannot buy less than $50,000 on the individual market. A lot of insurance companies, it's $100,000 or more, but it just depends on your needs. And obviously, I've kind of talked about this is obviously to replace income. Why do you have it? Funding your debt, kids' education, obviously all those things that you would think that you would buy life insurance for. Um, and then how much coverage is right? Well, typically, and this is just very rule of thumb, but typically it's going to be 10 times your annual income. That's a place to start. If that's not affordable, obviously you buy less, but that's when, if you make $100,000, obviously you probably want to buy $1 million of coverage, because of what it does is it allows your family to have breathing room if something happens to you. Now, a lot of people can't afford that 10 times salary, but that's a really good place to start. And then this talks about, and people do different things with life insurance. I've had clients buy it because, I've had it because they're, into a certain charity and they have a trust that makes sure that that charity is going to get money. I've had people buy it for their animals. So lots of different reasons. And it's really important because, you see all these commercials and it says, call whatever, and we'll give you a quote. Well, the truth of the matter is you do really want to work with somebody, not selling the service, but I'm saying that, life insurance is going to be, it's a premium. So if it's $100 and you have an agent or you have a broker, it's still going to be $100. We are paid by the insurance companies. So it only makes sense to have somebody work with you to figure out, one, how much to buy, where to buy it. And because like I said, there's a million different ways you can run quotes. You can buy insurance. It's very, very, very personal. And quite frankly, we don't cost you anything. So whoever your professional is, you definitely want to work with a professional. And then underwriting, just to kind of manage expectations. Underwriting can take depends on the amount of insurance, but I've had it take 4 months for somebody to be able to buy life insurance. I've also had people being able to buy it in 3 weeks, but it just depends on your risk class, how often you see the doctor. All those variables are built into how long it takes to buy it. So, and it's really, really, really important that if you do have any medical conditions, that you're very honest with whoever you're working with, because that determines what carrier you go to. That determines the amount of insurance. That determines the type of insurance. It's very personal. It's not like seeing a commercial on TV and calling up and getting a 10-year quote and boom, you buy it. That's not what life insurance is supposed to be. Yeah, that fits a need, but at the same time, in order to do it right, it takes some time. So, and I'm a big believer in not buying too much insurance. So I don't care what kind of insurance, if it's medical insurance, life insurance, disability insurance, I don't care. You always want to stay within a budget. It has to be affordable because you never want to let it lapse. If you work so hard to get something, you paid for it for a very long time, and then all of a sudden it becomes unaffordable, you just don't want that to happen. Now, if you can, the best way is to have a trust. If you have minor children, things like that, you do want to have the trust be the beneficiary, and it's very inexpensive to write a trust now. I mean, it's not like it used to be, but trust can be very important. But you can also own it individually. It's not one way or the other. You just want to make sure that if you do have younger children, the insurance companies will not pay out a child under 18. They'll pay out anybody 18 and over. So like I mentioned, it's like the life insurance market has changed a lot. And because we had very low interest rates for quite some time, life insurance companies it was becoming more and more expensive because the insurance companies themselves were not making money. So it has become a little bit more expensive, but also because of COVID too, because online applications are very popular. It's very possible to receive instant approval, highly unlikely, but we're talking about maybe a $50,000 policy on somebody that's super healthy. you might be able to get it, and I'm not going to say immediate, but within a couple weeks. And then accelerated underwriting. So underwriting has changed a little bit. Obviously, people didn't want the paramed companies coming to their home. So they started doing a little bit more going into your doctor records as opposed to coming out to see you and all those kind of things. So just keep in mind that every insurance company handles it differently. And it's important to find out, like I mentioned, be really honest with the person that you're dealing with, because they're going to point you in the right direction as far as what type of underwriting you need, what'll work best for you. And this is something too, we talk about being honest. This is a big question I get all the time, and it's on on cannabis. And it's, as it stands right now, obviously I'm in California, but and it's legal. A lot of insurance companies don't even test for it anymore. And some of them do. And that's why being honest is really important, because I can't tell you how many people they say, oh, I'm super healthy. But you find out they have cholesterol issues, and, they're on blood pressure medicine, or, there's recreational stuff that they do. But if you're honest and you tell somebody that, you use cannabis, there are companies that just don't care anymore. So it's not even, some of these companies, you're not even considered a smoker, because, like a, cigarette smoker, because cigarette smokers, actually their premiums are 3 times as more expensive than non-smokers. And it used to be that cannabis was the same, but now it's not. So if you're honest and we find the right insurance company, it's no big deal. Oh, look, I did this pretty quickly. Does anybody have any questions? I don't know if I can unmute you, or we have any. I don't see any chats and any questions. But I wanted to say that, again, thank you so much for showing up, and thank you for being part of it. I hope everybody had a good lunch. And just keep in mind that life insurance is meant for so many different uses. Like I mentioned, it's the business owners, it's key man, it's it doesn't matter. It's the working mom, the working dad, the whatever. I mean, like I mentioned, I bought it for my kids. So there's typically always a way or a need for it. And, just make sure that when you go through the process that you do it right, you're honest, and that you work with a professional. I would strongly encourage you not to answer the commercials on TV and call an 800 number and buy life insurance that way. Because essentially what you're doing is you're buying the commission product that is probably a product that has a very high commission and it's a high turn rate. So that's not what you want to do. Anyway, like I mentioned, if anybody has any questions, let me know. You can shoot me a chat. And if anybody wants additional information, please let us know. We're always here to help. And we're going to do another Lunch and Learn on Medicare, I want to say in a couple weeks. So hopefully you guys can attend, and I look forward to seeing you. And thank you again. Take care.